before we get into the video, guys, just want to let you guys know that my Patreon channel is up and running. Patreon.com/thirdwavetrades. From there, you can pick 3 different levels and tiers. We have something for everybody from beginning traders to traders who've been around for a long time. You'll get access to various educational content as well as my own personal analyses on different stocks and tickers, including Tesla, Nvidia, Neo, Palantir, and many more. So you'll get that before I post any videos on YouTube, telling you how I'm going to play the trade, where I'm going long, where I'm going short, swings, scalps, and day trades. Additionally, guys, you will be able to access a live trading community where we talk about our trades for that day. We go over different earnings plays, we go over different market data and news. We share any plays and setups that we're getting into. We post our wins, our losses, and we just go over everything that we are doing as a trading community. So it's a great help for new traders to be able to share their experiences with other traders who have a little bit more experience. We have a progress chat where we share, like I said, our wins and our losses. And it's not just myself, guys. We have a lot of people in our community are making money. We're doing it from day trades and scalps as well as swing trades. So there's something for everybody, no matter what your style of trading is. Alright, so if you guys are interested, we would love to have you join our community. Go to patreon.com/thirdwavetrades. Find the tier that works for you. Come join us and find the way to financial freedom. Hey guys, what's going on? Welcome back to Third Wave Trades. Today I'm going to give you guys an update on Tesla and why I think that now is the perfect time to go long. We've been talking about Tesla for a while. We watched it go all the way from $150 to $300 and now this pullback. And like I said in my previous video, I thought that we were going to come a lot lower, and we have. Now, you guys know what my previous count was, but I think that there are some other ways that we can interpret what has played out. So I'm going to go over all the different scenarios that I think are possible, and I'm going to eliminate them and give you guys what I think is the most probable scenario that is going to happen in Tesla stock according to the Elliott wave principle. All right, guys. So before we get started, quick disclaimer, I am not a financial advisor. This is not financial advice. Please do your own due diligence and research and or consult with a financial advisor before making any trading or investment decisions. Secondly, guys, if you could, please hit the like button down below if you guys find the content useful. And please subscribe to the channel if you guys want more Elliott wave breakdowns on your favorite stocks, cryptos, and commodities. All right, guys. So this is actually very important. What happened today is extremely important, and by that what I mean is where the price came down to. So if you guys take a look, we closed today at $219.22. In the after hours, we ended up going lower to roughly around $216. Now, why is that so important? We're going to talk about that in a second. But first, I want to give you guys what some of the possible scenarios were, right? And I'm not going to go all the way back. You guys can see my previous videos for that. But we will start from the January lows when we were down at around $100. So we had this impulsive move to the upside, which ended up being our first wave. And then we had this 3-wave pullback, which was our second. No problem there. All right. Then what we were expecting from that point on was a third wave. And we counted this out, and we were expecting this to honestly go a little bit higher. Why? Because when you're dealing with a third wave move, you really want to see that 161.8% extension, right? So that would have taken us to roughly $340. And if you go and see my previous videos, that was the level that I was looking for. When we pulled back at the 300 level, and as we were getting closer to it, I noticed different things happening in the RSI, saw the divergence playing out, and I knew that there was a possibility that we would pull back. Now, the question is, at that time, it was still a third wave move, right? Because although we would like to see the third wave go to the 161.8% level, that's not necessarily where it has to go. As long as the third wave is not the shortest wave, it's a valid count. So it could have been that our fifth wave would have been more extended. All right, so then we got this move, we pulled back, and then the question was, what was our pullback going to look like? So in my last few videos, I was talking about this being an A, B, C as a zigzag, and I said that there were a couple levels that we could bounce from. One was this green area highlighted over here, which there was a significant gap. It was around the $240 level. We had a good support level there at $237. And the next level was this orange highlighted area, which was the golden pocket, right? So the 50 to 61.8% retracement of this this move up. And as you guys can see with this week's price action, we pushed lower than the green zone, right? So we can eliminate that. And we came into this golden pocket, and that's where we are. And then I said that we had support at 217. Now, after hours, we have hit 216. So we broke this level. Now, why is that significant? That's significant, guys, because what that does is it automatically discounts this count right here, right? It basically eliminates this as a possibility of this being a first wave, a second wave, a third, and a fourth. And the reason why, guys, is because one of the 3 cardinal rules of Elliott wave theory, right, is that the fourth wave cannot go into the territory of the first. So the first wave ended at $217.65 roughly. The fourth wave has now broken below that. So now there's only 2 possibilities for this. I mean, if this is still the count, then what we're looking at is a leading diagonal, right? So that's basically where that's the only scenario in a first wave of a situation where the sub fourth wave can go into the sub first wave, right? So basically then we would have 1, 2, 3, 4, right? This could go lower, and then we'll get a 5th wave over here, and then you can see that that kind of violates that rule. But that's the only possibility for this now to still be a 5-wave count. The other possibility is that we are getting a 1, 2, 1, 2. And now this is what my initial hunch was, as you guys know from the previous videos, that we were in a 1, 2, 1, 2 scenario. But now I think it's officially the case that we are in a 1, 2, 1, 2 scenario. And the reason is because, like I said, the fourth wave has now gone into the territory of the first. Before, when we were over here and I was calling it out primarily because of the extension of this move, right? So if we look at the level that this impulsive wave extended, it was almost, a little bit shy of the 138%, right? So it was between the 123 and the 138%. And actually, I should have that over here, right there, right? So it was actually right at the 123.6%, which is a perfect ratio for a 1, 2, 1, 2 scenario. So normally you'll get a 1-to-1 or a 1 to 1.23 ratio for a 1, 2, 1, 2. Now, I think because of today's price action, we can safely eliminate this as a count. Now, again, there is a possibility that it will end up being a leading diagonal, but I think we can cross that bridge once we get there. I think right now more evidence is pointing to a 1, 2, 1, 2 scenario. And another piece of evidence would be the fact that this was a 5-wave move, and maybe, technically, the first, the third, and the fifth could be either a 5-wave or a 3-wave move, but I think in most scenarios you would expect a 3-wave move in a leading diagonal. But alright, so we've eliminated that as a possibility. So now what are the other possibilities? Well, now going with the scenario that this is a 1, 2 and then a 1, 2, I was basically giving you guys this as an ABC pullback. Now this is perfectly valid, and this might still be the preferred scenario. I think that a lot of people would agree with me as the pullback here. Basically that this is a zigzag move, right? But there's another possibility that occurred to me recently, and I would like to share that with you guys because it makes sense to me in a way that would make the 1, 2, 1, 2 more compelling, more stronger of an argument, right? Or a stronger argument, I should say. So And that idea is basically that um, this is not the entire correction, but the entire correction is larger and started a while ago, right? So um, let me hide this and I'll show you this. All right. So now, if you guys see, I have two corrections drawn here. Let me just eliminate this. All right. So in this scenario, wave 1 wouldn't have ended over here at that 299 level, but rather over here at this top, right? And the entire correction wouldn't be just from here, like I showed you with that zigzag, but actually started back over here. And what we have now is an expanded flat, which would go parallel with this flat over here from this move. Because one of the rules of a 1-2-1-2 is that usually you won't see the rule of alternation play out, right? So the rule of alternation is if you have a flat in one scenario, you'll have in a second wave, then the fourth wave you'll have a zigzag, or vice versa, right? But in a 1-2-1-2 situation, very often you'll get the same correction. Now, while these look like completely different types of corrections, they're actually just variations of the same correction, which is a flat. This is a regular flat, and this is an expanded flat. And I can show you what those look like. So if you guys take a look at this chart right here, this top correction we have is a regular flat, right? So you have a 3-wave move for A, a 3-wave move for B, and then a 5-wave move for C. At the bottom, you have an expanded flat, or an irregular flat. Again, 3-wave move for A, 3-wave move for B, and a 5-wave move for C. The difference is where B and C go, right? So in a regular flat, B will end up retracing about 90% of what wave A did, and then wave C will end up going just past wave A a little bit. In an expanded flat, wave B overtakes the top of the previous impulsive wave move up, right? So it goes further than where A originated, and C will go further than where A ended, right? So they get progressively bigger. Also, the levels is basically, if you wanted to measure them out, extended to about 123%. So wave B is 123% of wave A, and wave C is usually 123 to 161% of wave B, right? Now again, I want you guys to take a look at both of those flats, and I want you to compare them to these flats that we have here on Tsla, right? So here you have your regular flat, and you can see this is made up of 3 waves, right? So you have 1, 2, 3. Over here, you could make the argument that this is a complex move for wave B, and then this was 1, 2, 3, 4, 5. If we take a look at this flat over here, this expanded flat, you guys can count 3 waves here, 3 waves here, and now what we could expect is a 1, 2, 3, 4, 5. So if we see a 5-wave move play out over here, then I will be 100% convinced that this is in fact what's playing out. Now if we just bounce from here and we just go higher, then this might not be the situation, right? Because as of right now, I can only count 1, 2, 3, right? So you would need a 5-wave in the C leg for it to be a valid flat, right? So if this is only 3 waves right here, then this is most likely not the case in the first scenario that I told you guys, with this being the top of the subwave 1 and this being a zigzag is probably true. I don't think that changes the overall picture that much, but it might in one scenario, and I will tell you what that is in a second. So yeah, so basically what I would be looking for if this is the case is one more bounce up and then one more push lower, right? And that push lower could bring us back down to this rising channel line over here, so roughly around $206 to $208. You can see there's plenty of reasons for us to bounce there. It's also a previous level of support, So and it would basically hit the 61.8% level perfectly around that $206 to $208 range, right? So um, that is kind of what I'm expecting. Now, if that is true, that would actually make me really excited, because, right? So essentially, what I'm saying, guys, is that this would be 1, 2, 3, 4, 5. Let me change the color, right? So this blue move over here. So if we see 5 waves play out like that, and we get to this 206 level, that would actually make me very, very confident in what's about to happen next. And what is about to happen next, if that does play out that way, is that we are going to get a very, very, very strong rally, a very strong move for Tesla, that I think could see the stock go up to $500, like $530 to be exact. And why do I think that? Um, Well, but all right. Before we get there, guys, I want to make the case a little bit stronger for this being an expanded flat over here, right? Um, so first off, I think that I can count 5 waves over here, like this, right? So I'm not gonna get into that right now, but I do think that I can make the case for this being 5 waves, right? Now, that would mean then, like I said, that this is our A wave over here. So we have 3, and then we would be looking for 5, right? So one more push up, and then one more push down for that move. Now, the other way I wanted to make the case is by actually measuring waves A, B, and C over here. Let's measure out wave A and wave B and wave C. All right. So wave A was a 3-wave move, and now if we want to measure wave B in relation to wave A, we're going to start off with our extension tool, go to the top of wave A and come down, and we'll see wave B finished just over the 138.2% extension of wave A. All right, so that's the perfect level that it needs to be at. And likewise, if we measure wave B and we compare that to wave C, we would expect wave C to end somewhere within this same region, right? So the 138.2% would be 216, which is where we're at right now. But keep in mind that we still need one more wave up and one more wave down, right? So we could have 5 waves in this C leg. And we can go as low as the 1.618%, right? So which would take us to $200. And I think that we would bounce somewhere between this level, somewhere around 205, 206. So I think the case can be made for this being an expanded flat. What that would also do is make the time ratio between, for this correction, right, from here essentially to here, more equivalent or more equal to this time, right? The time it took for this flat. Because if we go with just this flat, right? If we go with just this move, this zigzag, I think this is basically 1 month, whereas the time period for this correction took 2 months. Now we do expect this correction to be slightly less because it's a sub wave, right? It's a 1-2. It's a nested 1-2 within the third wave of this move. So we should expect it to not take as long as this, but it still brings it a little bit closer to a more realistic level, right? So the time frame then becomes slightly more equivalent, and I think it becomes a stronger argument. So again, guys, basically what my argument boils down to is that this is a flat, this is an expanded flat, right? And we could see one more wave up, one more wave down, around that 205 area, and then from there, that's where we are going to see the monster move for Tesla. Now, again, guys, as of right now, this is just kind of like a hypothesis, I guess you could say. Right now, we have to wait to see how it plays out. But if it does play out this way, the reason why I would be really excited to see this play out is because very often what happens when you get an expanded flat for a second wave, right? What that means is that the third wave that follows often goes to not the 161.8% extension, right, which is the typical move, right, but the 261.8% extension move. All right, so I'll say that one more time. When the second wave ends up being an expanded flat move, the third wave that follows, very often, right? I don't have the exact numbers, but this is standard Elliott wave literature. The third wave that follows very often goes to the 261.8% extension. What that means is this move that would follow, if this is true, would be a very, very, very strong impulsive move that could see Tesla go to $550 roughly. All right, so I'm putting that out there right now. Again, I'm not saying that that is the case. We have to wait to see if all our ducks line up, but it is something that I will be keeping an eye on, and I'll let you guys know what I think is going to happen there. Now, there's other things that I see as well, right? So if we were to bounce from this level that we're at, which is roughly that 205 area, right, you can see that we have support from a previous time that we were in, we were around there, right? So it created support back over here. So what that already shows me, right, and I'll switch the time frame for this one. Too much. Let's go to a weekly chart. If we go to a weekly chart, you guys can see right here, we would have an inverse head and shoulder. If we were to bounce from right here, go back to that neckline of around $314, get that break, and then that would lead us to a very strong move. And if we were to measure, we would expect a 1-to-1. So basically, we would expect a 1-to-1 from the peak of the head to the neckline, from the area of the breakout, right? So a 1-to-1 would give us a projection of $526, right? So roughly around that same area that we would be getting for a third wave move that I just talked about, right? So 530, 550, that's kind of the area that I'm looking at, right? Now, there's another piece of evidence that I think makes the case for Tesla about to have a very strong move. We already talked about in terms of the Sam Weinstein stage analysis method, right? We got the breakout above the 30-week moving average a while ago, and now we are coming back to test that, right? So here is, we're on a weekly chart right now. This red line that I have drawn right here is our 30-week moving average, right? So you guys can see it right here. This is our 30-week moving average, and now we are coming back to test that. So once we get a bullish reversal on that move, that will basically be an indication to go long as a trader. And as long as we stay above that, we will be in very, very bullish territory. All right. So I'll go more into that in other videos, but really, if you guys want a real detailed analysis and more than what I just showed you guys over here, please join me on my Discord, join me on my Patreon. The link is in the description down below. As you guys saw from the intro of this video, we're doing a lot to grow that community, and I provide a lot of value, in my opinion. I give a lot of educational content, and I give you guys my own personal trades, my own personal analyses. We have a good community there, and we're all about making money using good technical analysis. So again, guys, you guys want more detailed analysis, you guys want to know more about this play, then go ahead and go to patreon.com/thirdwavetrades and join me there. All right, but that's all I got for this video, and I hope you guys found it useful. If you guys did, please hit the like button down below, and please subscribe to the channel for more Elliott wave breakdowns on your favorite stocks, cryptos, and commodities. I will be back with more. Peace.